Welcome to this explainer. Today, we're unpacking Webull's explosive Q1 2026 earnings report. We're going to track their rapid and honestly fascinating evolution from what started out as a pretty simple retail broker into what is quickly becoming a full-blown AI-powered global powerhouse. If you've been keeping an eye on the brokerage space, you already know Webull has been making some incredibly aggressive moves since going public last year. And these Q1 numbers? Well, they give us a fantastic look under the hood. So let's dive right in.
Here's our roadmap for today. We'll be covering the Q1 financial snapshot, empowering the active trader, Webull goes global, the institutional pivot, how Webull makes money, and we'll wrap it up with the bottom line.
Section 1. The Q1 Financial Snapshot.
We're going to start right at the top with the sheer scale of the financial momentum Webull is currently experiencing. Get this. Despite a really choppy macro environment, we're talking a software sector sell-off, escalating geopolitical tensions, rising energy prices, Webull still hit $24 billion in total customer assets by the end of Q1 2026. That marks an absolutely incredible 90% increase year over year. It means that despite all that market volatility, customers stayed highly engaged. They were actively transferring net new deposits into the platform to the tune of $2.1 billion in this quarter alone.
And that momentum, it carried straight into their trading activity, hitting a massive $261 billion in equity notional volume for the quarter. To put that into perspective, that is an astonishing 104% jump from last year. And it wasn't just equities either. Options volume shot up by 31% to 159 million contracts. Their active traders absolutely weren't sitting on the sidelines during the Q1 volatility. They were leaning in hard.
Now, all of that intense trading volume directly translated to the top line. Revenue absolutely soared, up 36% year over year, coming in at nearly $160 million for the quarter. What's really impressive here is that this is their sixth consecutive quarter of operating profitability. It's solid proof that their business model scales incredibly well when trading activity heats up.
Section 2. Empowering the active trader.
You know, the competition in the brokerage space used to just be about who had the cleanest app interface. Not anymore. Now it's all about aggressive AI product roadmaps that actually help users trade smarter. Webull is rolling out tools right now that give retail investors the exact same research and execution speed that's usually reserved for Wall Street institutions. For example, their Vega analyst can generate comprehensive, highly personalized research reports on any company in literally minutes. Plus, they're following that up with Portfolio Blueprint and an AI portfolio tool that practically puts AI-driven decision-making right into the palm of your hand.
The really crucial piece to all of this is Webull's new MCP server. Think of it as the foundational backend system that directly supports a whole new frontier called agentic trading. This isn't just some basic AI chatbot giving you generic advice. We're talking about an AI agent that can natively connect with Webull's infrastructure to actually execute strategies and manage portfolios for you. Webull literally wants to be the base infrastructure layer for this entirely new way of trading.
There's also a major near-term catalyst we need to talk about: the SEC's removal of the pattern day trader rule. Historically, this regulation restricted accounts under $25,000 from making frequent day trades. Well, effective June 4th, that changes. And thanks to Webull's agile engineering, they are going to be ready on day one to offer unrestricted day trades for qualifying margin clients. Meanwhile, a lot of the legacy brokers are out there struggling to update their decades-old systems. Webull is betting this is going to be an immense opportunity to sweep up and consolidate active accounts under their roof.
I absolutely love this quote from Anthony Denier, Webull's US CEO, because his visionary perspective reveals exactly why they are building out all this tech. He says, the interface of the future is not a screen on a smartphone, it is an API. They are betting heavily that the future of trading isn't humans tapping away on a glass screen, but rather AI logic connecting seamlessly to broker infrastructure. They're basically laying down the pipes for the future of finance right now.
Section 3. Webull goes global.
Let's zoom out for a second. While they're obviously innovating hard in the US, Webull is also actively exporting their zero-commission retail trading experience to the rest of the world. They actually started this global expansion in Hong Kong back in 2020. Fast forward to late 2025, and they launched in the Netherlands. But look at what they did in Q1 2026. They just got approved to operate in 22 new European Economic Area markets and have officially launched in Germany. They're now operating in 15 global markets and are offering zero-commission trading in 7 of them.
And this international strategy, it is paying off heavily, especially in the Asia-Pacific region. Over there, they've already secured nearly 800,000 funded accounts, holding $4 billion in customer assets. Their ability to take their ultra-reliable US-grade infrastructure and compliance capabilities and then export them seamlessly across borders is proving to be a massive competitive differentiator.
Section 4. The institutional pivot. So, beyond the everyday retail trader, Webull is making a major strategic pivot into the highly lucrative business-to-business and institutional space. Believe it or not, institutional flow actually accounted for 9.5% of Webull's total equity volume this quarter. Think about that. Nearly a tenth of their volume is now coming from professional and institutional clients. It's solid proof that they are no longer just a slick retail app, they are serious infrastructure providers.
To truly support that institutional growth, Webull secured a staggering structural win, a U.S. self-clearing license. Once this is fully operational by late 2026, they'll be able to clear trades and custody securities entirely in-house. That is a game changer because it drastically lowers their operational costs, and they can then pass those exact savings on to offer highly competitive pricing to new B2B partners.
And they are already busy building tailor-made B2B infrastructure across the globe. We're seeing Webull Connect for Australian financial advisors, TrustLink for trustees over in Hong Kong, and a major partnership with Merits in South Korea. All told, they've onboarded nearly 200 institutional clients to date, and honestly, it looks like this is just the beginning.
Section 5. How Webull makes money.
Okay, so with all this huge volume, significant AI investments, and a zero-commission model for retail traders, you might be wondering, how exactly are they monetizing this whole ecosystem? Well, based on their 2025 full-year data, they generated an impressive $571 million. Over 53% of that comes directly from payment for order flow. That's where market makers pay a small rebate for the right to execute the trades. The next biggest slice of the pie is interest income from margin loans and cash balances. And finally, handling charges, which are basically fees on options, crypto, and futures. And that is actually their fastest growing revenue line right now.
Now, while they are definitely profitable, it's really important to note that their margins are currently compressed. Why? Because they are intentionally reinvesting heavy capital right back into marketing and brand awareness. Adjusted operating expenses jumped 64% in Q1 to over $141 million. They're doing high-visibility things like sponsoring the Tampa Bay Rays with a jersey patch. They aren't trying to just maximize short-term profit margins here. They are spending aggressively to completely dominate market share.
Section 6. The bottom line.
Let's bring all this data together and take a look at the bottom line of Webull's platform health. They've grown their registered user base to an incredible 27.6 million, and funded accounts sit right at 5.11 million. But hands down, the most important metric here is their retention rate, 98.4%. That is a record high. It proves that once traders join Webull and get a taste of their advanced tools and zero-commission structure, they rarely ever leave. They've built an incredibly sticky ecosystem.
So, as we wrap up this explainer, the big question moving forward is this. Well, Webull's high-stakes bet on becoming the ultimate infrastructure for AI trading officially crowned them the new king of the brokerage industry. If the interface of the future really is an API, Webull seems perfectly positioned to capture that massive shift, all while the legacy brokers struggle to catch up. What do you think? Keep an eye on those June 4th PDT numbers to see if this thesis holds up. Thanks for joining me, and stay curious.